Welcome to PhillipCapital Weekly Market Watch. I'm Kervin, securities dealer from PhillipCFD. In this week's Market Watch, we will be looking at the escalating trade feud that is happening between the US and China. The multiple exchanges made between both countries and try to better understand where this conflict is leading us to. My colleagues have, for the past few weeks, been talking about how a US tariff imposition affects certain industries and markets. Mid last week, China officially announced that they will, in direct response to US tariffs, institute a 25% tariff on $50 billion worth of US goods. Approximately 106 different products will be affected by this. Products affected include soybeans, airplanes, as well as cars. There has been a lot of talk regarding the tariff on soybeans, as China remains the top importer of this soft commodity. China has been importing around 2/3 of globally traded soybeans. Tariffs imposed by China on US soy imports will affect the agriculture sector in the US, as Chinese buyers will be pushed to seek for cheaper sources from countries such as Brazil. Trump has responded late last week with another threat of imposing further tariffs on an additional $100 billion of unspecified products, on top of the existing tariffs covering $50 billion worth of US goods. In the event that Trump follows through with his threat and China reacts with tit-for-tat action against the US, China will inevitably only be able to take limited action, as it is projected that Chinese will only manage approximately $140 billion worth of imports from the US this year. In summary, what we do see is that currently, any additional implementation of tariffs by either country will require time before they can fully be rolled out. Apart from this, China has long been increasingly receptive towards supporting efforts on globalization. The coming BOL meeting in Hainan will likely show China's reiteration on commitment towards this. Both the US and China will do well to avoid an all-out trade war and will likely end up at the negotiating table to discuss and address their differences. So, what can investors do during such times? Investors can, at least in the near term, look towards emerging markets such as Brazil and Argentina, or consider hedging existing US agricultural stock positions via CFDs. Clients may consider using PhillipCFD and Phillip ETF to capitalize on global trading opportunities in both rising as well as falling markets. This is all for today, and hope to see you soon in our next round of market commentary. Subscribe to us on PhillipCapital, YouTube, Facebook for more Market Watch videos. Thanks for watching.